Transferring wealth successfully starts with asking yourself questions that will give your family a better life now and for generations to come. In this podcast, financial professionals John and Michael from Copper Beech Financial Group guide you through eye-opening questions to help you discover the truth about your wealth. Now, on to the show.
Hello and welcome to The Truth About Wealth with John and Michael Parise of Copper Beech Financial Group. Hey, guys.
Hello, Wendy.
Hey, Wendy. How are you?
I'm good. How are you guys doing?
We're doing great.
Doing very well.
All right. What do we got on tap for today?
Well, we thought we'd do an update. We through the podcast a couple of years, we always sometimes share with our audience what we're hearing out there, what clients are sharing with us, what their concerns are, the questions about what's really going on, doubts about things they're doing as business owners or as investors. So I thought we shared today some of the last few months. I think everyone realizes we're in a very interesting world right now, and more people are more concerned about it. And what triggered this was I spoke at a conference just last week in California with a group of 60 people. And the questions I got and the concerns that were shared kind of blew me away a little bit. So I said, you know what? We should probably have another podcast and talk about what we're hearing and what questions people are asking us as practitioners for, like, what should I do now type of thing. I know, Michael, I'm not sure you're hearing the same thing, but that's what I keep saying.
Well, I mean, I wasn't at that conference that you spoke at, so I'm actually really interested to hear what they were asking. But certainly, yes, we were hearing similar themes from a lot of our clients just in our client meetings, and obviously with what's going on out in the world geopolitically. I mean, as we're recording this is, I think, about a week or two from the Hamas invasion of Israel, and the Ukraine war is still in full force, and so a lot of things going on, and we're hearing a lot of questions from clients and things like that. So yeah, no, I think this is a good update to give to everybody.
Yeah, and let me give you a quick answer to where we feel the world is. We've never been here before. It's kind of scary. Stuff is going on we've never seen before. Where interest rates are, the cycles, the global issues. This is a brand new world that we're all facing together. And from that conference, I sensed that from a couple of people. So the question I got was, okay, John, what's really going on? Is there something I should be preparing for? Is there something I should prepare for to protect my family? What are you guys recommending your families to do that hire you? How do we protect our kids? How do we protect our grandkids? And I'm saying, wow, these are really tough questions to answer. And I'll tell you how I answered it. I said, I'm going to give you one recommendation. You've got to revisit everything you've done in your financial world. You need to get and circle of wagons with all your current advisors, CPAs, attorneys, financial planners, financial advisors that manage your portfolios. You need to circle of wagons and sit with each one of them and say, hey, what should I be changing, i.e. with my state documents? What should I be changing with my business models, my structure? Is there something I should be looking at? And I'm afraid that there's not a lot of good focus on that I sense from anybody we're working with. Is they're still confused about what they should be doing with current tax laws. Like, what's changing in Washington? Are they going to change these estate tax laws next week? How do I address that? How do I manage that? Because between the Democrats and the Republicans, there's always a battle on everything. But there's one thing that I'm very clear about. He said to me, is his taxes are not going to go down because we have to pay for all this debt, and they're going to come after everybody for more taxes. How do I protect my future success of my family?
Yeah, I mean, that's you mentioned the estate tax laws, and again, we're still a couple years out from a lot of the provisions of the Trump tax cuts of them sunsetting, and again, the major one that we talk a lot about with our families that are facing estate tax exposure is right now we have basically the highest estate tax and gift tax exemption that we've ever had, meaning the amount that you can transfer to the next generation before you pay gift or estate taxes. That at the end of 2025 will sunset and will be basically cut in half plus some inflation adjustments. So we're not 100% sure where that will settle into, but it's going to be less than it is today currently. And again, we've talked about this a good amount, I think, on prior podcasts, but we're still getting having a lot of conversations with our families around the best way to use that. Should I use that now before it sunsets, or are we in good shape? Do I need to really be worried about that? So kind of to your point, that I think if you feel like you are in a situation where you might have estate tax exposure, maybe not today, but in another couple years when this law sunsets, and you're on that cusp of that threshold, which is probably going to be around, let's say, $12 to $13 million per couple that you could transfer to the next generation. And if that's your net worth, and you're around there, I would have those conversations with your advisor team, because again, it still comes up almost daily, I think, for us. So
another question that was asked at that conference was, why are my advisors not being proactive on the things you're talking about? And unfortunately, that's the world we live in. If you think about how your current advisors work, like I'll pick on attorneys because Michael's an attorney.
Just because you like picking on me?
I like picking on attorneys. So attorneys really are hired to do a certain project or a task, and they do the project and the task. They charge you their fees to do that, and they move on to another client. So they really don't call you on a monthly basis and say, hey, John, what's going on? We should be looking at these things, those things. They're really not designed to do that. So it's not their fault. CPAs also are the same. They're very, very busy all year. They file tax returns all the time. They don't have a lot of free time to do a lot of stuff. So the way we built our advisor community is a challenge we see with clients. And that came up at this conference. He goes, why are they not being proactive on these things you're talking about? Is it left up to me to do that? And I said, yes, it is, unfortunately. But I don't know what to ask. I don't even know what the issues are. I don't know what I don't know. So how do I do it? So I saw this. Wow, that was a moment I said, okay, this is something we need to address. So I spent a good 15 minutes talking to this group about the proactivity and their responsibility to do that. And they've got to start reading about things. They have to start educating themselves about what's going on. I know it's tough. It's a lot of complex financial issues they have to try to understand. But if they're really serious about protecting their family wealth and protecting what's going on around them, they really need to be getting involved and understanding more. They can't rely on anybody to help them through that, because our communities are not designed that way. These CPAs, attorneys are bright people, but their job is not designed to pick up the phone and call you, because they charge by the hour. They charge by the minute. Some attorneys charge by the minute. So it's one of those things where they're not designed to do that. So one of the challenges is as an investor, as a business owner, as someone that is trying to pass wealth to the next generation, you need to be proactive and start circling the wagons with your advisors and ask them for your help. It might cost you a few extra dollars, but I think it's worth it. Again, going back to why we built Copper Beach, that's what we get hired to do for these families. We act as that family CFO. We take charge of all that, because I saw a weakness years ago about that, but it's more prevalent now than I've ever seen before after almost 40 years in this business. Mike, I don't know if you have any other thoughts on that.
Well, I think, we talk about that a lot, and hopefully it resonates with our audience. But yeah, I mean, the advisor community is in many ways, particularly, well, it's a couple things. If you are on the higher end of the wealth and income spectrum, from our experience, there's less advisors in the community that are maybe fully aware of all the options that community may have to help with those things you talked about. That. So that's a challenge number one. We talked about the plateauing effect a lot in terms of advisors, maybe really good in a certain segment of whether it be income or type of client that they may be working with. And if you've maybe moved away from that, they may just not be in, again, very bright, but may not be the best fit for you anymore. And that's natural. That happens in a lot of contexts. So that's one. I think that if we talked about on the last podcast, I remember in the CPA community, you told that story about the CPA, the younger guy, CPA that you met who was, I think he was a full-time CPA, but he also had, he was making a lot of money as a bodybuilder, as I guess an influencer on social media. So now, we talked about having a lot of, there's now more competition. I know in the CPA worlds, they're under a lot of pressure because they're having a hard time recruiting younger talent out of college, and maybe the ones that want to be influencers to some degree. It's a challenge out there now. So again, to your point, Dad, you have to be proactive because a lot of the advisor community out there, they're stressed out amongst themselves too. They've got a lot of clients that they're trying to work with. And again, getting back to that law sunset on the tax side, we've had some conversations with CPAs, advisors, valuation experts. So when you are going to be doing some gifting and maybe taking advantage of this increased exemption amount, you're likely going to have to hire valuation companies to make sure that they're adequately reporting the value of whatever you're going to be transferring to the next generation. That's an important component. We had a call a couple of weeks ago with a valuation expert, and she told us, she says, it's really good that you guys are dealing with this now as opposed to sometime in 2025, because people in our industry, we're going to be working 24/7 because there's going to be a lot of people that are going to finally realize, okay, this law is going to sunset. These laws are going to change. I'm going to need to, and now we need to get all this stuff valued. And you're either going to pay, those people are either going to pay a lot more because we're going to have to increase our prices because there's just going to be so much demand, or we're just going to have to tell people we don't have the time. So again, being proactive, if that's a concern of yours and your family, start now. So because in 2 years, it might be too late, even if the laws haven't changed. It's just to get everything done is going to take a lot of time. So, be proactive. It's a little long-winded there, but just kind of reiterate what you were saying, Doug.
Yeah. And just to keep going here, two of the other questions I got from a couple folks was, what's this gold and silver thing, John, and these alternative investments?
Yeah.
What are they? How come I don't have any of them? So I don't know your current advisor, but there seems to be interest now in things other than stocks, bonds, and cash. Someone asked me about artwork. Someone asked me about private debt, private equity. How do they get involved in
commodities? Probably a lot of times.
So there's a lot of lack of knowledge out there of what's available to really diversify portfolios. So I didn't get in a lengthy conversation, but I talked about gold particularly, that we have a gentleman, Andy Scheckman, who spoke on a couple of our podcasts already. And I love how he positioned gold. And I shared it with this group. I said, gold is not an investment. Gold is a stored value of wealth. It's been around for 5,000 years. People keep gold, hold gold just to protect their wealth over the next 20, 30 years. So should it be part of your portfolio? Full transparency, I buy gold because I think it's one of those balancing asset classes that, again, if you think about stored value, that's how I look at it. I don't watch gold prices every day. I could care less, but I'm going to move that value of that asset to my children and to my grandchildren, and it just protects the wealth. So they were kind of interested in that. Then I talked about silver being probably the better investment because silver is such a low value, and silver is more of an industrial kind of a metal that can be used other than just gold coins as an example. It's involved in telecommunications. It's involved in cell phones, in missiles. They use silver everywhere. So silver has a very, very different value for what it is, and I think it's a lower value, and I think it's a good opportunity to maybe take a look at. But that was one of their questions. Okay, so what about oil and gas? I bought this oil wells here, so why should I continue to do that? I said, well, if you believe that oil is going to be around forever, it could be a good, solid investment long term to balance stocks, bonds, and cash. There's tax benefits, and there's tax benefits on the income distribution. So there is support from a tax planning standpoint to buy oil and gas as a strategy. So there's other factors involved, and it was kind of interesting how they're unaware of this. They're not they're not understanding it. Their advisors aren't bringing it to their attention. So I told them to go do their research.
I think that's
like a father.
Well,
go do your own research.
That's a general, I think, theme that we even again, I wasn't a part of that conference, but the conversations we've been having with families about the investment world, their portfolios these days. Again, we talked about the geopolitical stresses that we're under now economically. We're still at very high interest rate environment. Again, as we're recording this, there's, I think one war, I guess you can call Israel Hamas engagement a war. I don't know if you call it a war at this point, but there's a lot of things that are happening, and that is, we are seeing a lot more interest in looking at maybe those other asset classes, like you mentioned, precious metals, oil and gas, different. Just the conversation seems to be shifting a little bit in terms of where we've been the last 10 years. There's still recession worries as we're recording this. So that it's how do we position our portfolios to take advantage of this has really been. I think we've always had those conversations with clients. It's always important to stay on top of that, but a little different, I think, than we've had in the past. So that's a good conversation.
One of the other questions I had received from one particular person is about real estate. They read an article that the previous administration, or the current administration, I'm sorry, was trying to get rid of what was referred to as the step up in basis on day of death on an asset. They're trying to eliminate that, which would be a big hit to the estate planning piece. So Michael could talk about that further. So he was very concerned that, because he owned a lot of assets with a lot of real estate that appreciated tremendously over the last 20, 30 years. And he was concerned about the capital gain tax, because they want to bump that up to a higher level as well. Mm-hmm. So tax seems to be a hot button as well. They're all concerned about what's that going to look like down the road. I wish I had a crystal ball. I do not know what it's going to look like, but I do know, and everyone I think will agree, that the only way we drive revenues to our country is through taxation. That's not a good thing to focus on, but that's the only way we're going to survive paying this debt down.
Or you print more money, which hasn't
worked out real well. Yeah. So that's why I said this is a new horizon for all of us. So I said to them, you have to be more focused on, it's not what you make, it's what you keep. So, put more in your 401k plans if you can, put more in your tax efficient annuities that you might have. There's other opportunities out there that are more tax efficient. I can't get into it in detail on this podcast, but there are other avenues to do advanced tax planning that we share with our families that we work with, and we work with their advisors to accommodate that. So tax is a focus, and they're all extremely concerned about that. So that was another hot button. But everyone's looking for answers, and I don't think anybody has any answers. But I do believe in diversifying strategy. In other words, you just can't have your eggs in one bucket. You really have to diversify. So if you're not diversified as a portfolio, go back to your financial advisor and say, how can I be more diversified for safety? How do we have more leverage on what we're doing for asset classes? Like, should I buy commodities in my portfolio? Should I buy other asset classes that are not in my portfolio currently? So go back and push back at your advisor and challenge them on what else they could be possibly helping you out with.
Yeah, I think another thing that's come up a lot, I know, is liquidity. I know that's again, kind of related to the investment piece, and in terms of staying liquid, again, being nimble given where we are economically. That tends to be a theme that we're seeing is families and clients are more interested in looking at that. And again, one of the, I guess you could say, the benefits of where we are interest rate wise is that, for a lot of years in the past, when interest rates were very low, clients didn't really have an option and to generate a significant yield if they wanted to keep assets liquid in a cash or money market or CD type of position because rates were so low. Now, the 10-year, I think as we're recording this, is probably right around 5%. So families and clients now have the ability to stay a little bit more liquid and still generate a decent yield where they haven't in the past. So that again has been a theme that we're seeing, I think, a little bit more, and having more conversations with clients around. And again, if you have a U.S. Treasury, that's a fairly safe asset. Again, nothing's ever guaranteed, but that's a relatively safe asset to park your money in. a lot of clients are saying, maybe we just want to see where this is all going to go. I'm going to leave maybe some assets in that liquid treasury type of position and keep it there. And, if I'm getting 5% as an example, that's not terrible. So that's another theme or conversation we've been having.
Yeah, and I was speaking on the estate side of the world with this group as well, and I talked about that our families that Michael and I and our team work with here at Copper Beach are very, very focused on asset protection for a bunch of reasons. One primarily is to protect the wealth that they've created, but also protect what I refer to as in-laws and outlaws. It's kind of a joke, but that's what we call them. So once I opened that gate, I had tons of questions about, okay, so John, tell me about this asset protection. Is that in trusts? Is that gifted assets to my kids? So they're all very confused on the techniques that are pretty routine in the estate planning world for asset protection. And they all said the same thing. Where are my advisors telling me this stuff? So it goes back to what I said earlier. I apologize. I'm not trying to knock these advisors. Is it when you're not proactive and staying in touch with a client, these questions they come up and they don't even know what to ask them. So when I opened that gate for that asset protection strategy, I spent a good 10 minutes talking about how trusts are structured. And then one gentleman said, well, I have a pretty good sizable estate. I'm working with my wife now to pick a trustee. That's a lot of responsibility for that trustee. And how do you do that? How do you help your families through that? And I talked about corporate trustee positions. We talked about Bridgeford Trust, one of our trusts that we use, trust companies out of South Dakota. So I talked about how trusts protect assets, but they also protect it for future creditors, whether it's a divorce or whether it's a creditor, someone trying to sue the family. So it was a really deep conversation about how trusts now are a vehicle that people use to do that. But remember, the administration that's now exists in Washington, they wanted to change all those rules. They wanted to eliminate some of these trust structures, the length of the trust. So they're nibbling at the edges, trying to change what's real successful for families that transfer wealth. They're trying to change that for one very good reason. What is that? They need tax dollars. So I think that's our future. I think we have to look at tax planning more focusedly. That's my opinion. But I think that's a weakness that I see that needs to be addressed.
Yeah. I mean, I think that corporate trustee conversation, that's a good one, because that is something that we've talked about a lot on this podcast. I think that is still coming up. We have, I think we maybe have one this week with an independent trust company, because families are looking for, they want to design an estate plan that incorporates more asset protection than less, to your point, and that tends to be the goal that they have, at least from our experience. And one way to accomplish that is by incorporating these third-party independent trust companies, as opposed to the family themselves taking over that trustee role. It's a lot of responsibility. It's a fiduciary relationship. And a lot of families say, you know what, I think this is maybe not a burden I'd want to put on, let's say, a family friend or a child or a sibling or something like that. Maybe let's look at that outsourced independent trust company to be able to take over that role. So yeah, we are seeing a little bit more of that. And Bridgeford Trust, the podcast we did with David Warren from Bridgeford Trust was a really good one. For those listeners who haven't listened to that, that's a really good primer on sort of how these trust companies work. So I would go back and listen to that. Yeah,
we use Bridgeford personally. They're trustees in our trusts. So it's there's a theme there that I started to hear from that group. But what always amazes me after being in this business all these years, that really not a lot of stuff has changed. This still seems to be a weakness in advice across the board, or at least ideas that can advance the success of families moving their wealth, whether it's more tax efficiently or in trust to the generations or asset protections, to make sure that they don't lose what they've created through their lifetime. Because I think the government's always going to be there requiring tax dollars to be paid. And how do you manage that? How do you not? Listen, I'm not trying to say everyone needs not to pay tax, but a lot of people pay a lot of tax. But there are legal ways to not pay tax, and you should look into it through your advisor community. The other question came up is we talked about it in the podcast, is the rules around IRAs, inherited IRAs. One of the ladies that came up to me, they had pretty substantial IRAs. They read an article about the Secure Act And she it's pretty good. Not many people read that article, and she was aware of it. She goes, "Well, I have this big, very large IRA. My kids are going to inherit, and they got to pay tax on it within 10 years. So they're destroying my ability to transfer that wealth to my kids over their lifetime under the stretch rules." So she was very savvy, but that came up too as well. So anybody with large IRAs or accumulating 401k plans or pensions, be aware, if you're not familiar with the Secure Act, to read about it, because it doesn't allow the stretch rules for your kids to stretch the IRA through their lifetime. They have to pay tax on whatever you leave them over that 10 years. So it's just one of those things that popped up. Trying to think of one of the other things that popped up that was go ahead if you it was family meetings, because I mentioned that in my presentation, that family meetings and communication to the kids are important, and it was amazing that there are still people in the audience that came up to be honest and said, "Listen, I really am uncomfortable sharing with my kids what I have." I said to him, I said, "They know you're rich. You can't hide that. They see you have 4 or 5 homes or whatever. You can't hide that. The better way is to teach them to be respectful and to be responsible the wealth you're going to give them." So I started to still hear the fact that people are not sharing what they have with their kids because they're afraid to do that for multiple reasons.
Yeah, no, that's always something that is a topic of mind of our families. I think we're still seeing a lot of our business owners struggle with recruiting and retention of key talent. We talk a lot about that. That is still a conversation that we're having at least weekly with families in terms of how do I recruit and retain key people? How do I motivate them? How do I develop leadership? And from a succession standpoint, there's still a lot of families are struggling with that. They don't have that built, and that's a long, detailed project to work on. It doesn't happen overnight. But that is something that, we try to focus a lot with our families and business owner clients on. They talk about that a lot. And we've had a lot of podcasts in the past that have talked about maybe some strategies that you could think about, or ways that you might want to incentivize, your key people to keep them around, and not go be a bodybuilder influencer in their spare time, which
I know, he sounded he was doing pretty well.
I know, and that's the challenge. We talked about that last podcast, I think, too, in terms of now it's sort of a new economy out there, for lack of a better term, and if you are a business owner, you have to recognize you're competing with you have more competition in different ways that you have to contend with. So it's so just keep focus on it, because your business is very likely your largest asset that you have in your family, so it needs to be protected.
Yeah, so I guess my bottom line to this podcast today is, if I give you that global perspective, is that things are changing. They're not positive in a lot of fronts. People are concerned. They don't know where to go. They don't know where to get advice from what source. And I challenge them that it's unfortunately it's in our court now. You have to adopt a different philosophy in how you approach your wealth, and you are now responsible for making sure that you get educated the best you can through sources that you develop on your own to get educated. And I said to all of them, I said, "Listen, feel free to call us at any time if you need a quick answer to something." That's what we're all about. That's why we do these podcasts. I hope they drive at least information to our listeners that they should start thinking about things they're doing maybe a little bit differently. So the message I left them was, it's all up to you guys, and you have to kind of start focusing on it more than you have in the past. But first step is go back to your advisor team and say, "I'm concerned about these issues. How can you help me?" And honestly, if they can't help you, find another advisor, because they're out there. So that's my message that I'm going to leave with you. But I was very, very thrilled to get those kind of questions, but I also was very concerned that there's not a lot of advice that they're getting from their current teams to help them through all their issues. So I get a little passionate about this stuff, because we work hard to save our families from making these mistakes, but we're a small firm. We can't work with everybody in the world around us. So you need to find maybe a group that can help you do that locally. Again, we're always available if someone wants to give us a shout. Michael, any more thoughts?
No, I think this is good. I think those are still the key topics. I mean, I'm trying to think if there's any more sort of unifying themes.
Those are the hot ones for
those are the hot
last
ones. I
week.
mean, it's a lot, yeah, and tend to be consistent with even some prior conversations. But yeah, I think the general theme is be proactive, as we said, earlier here and in prior podcasts. It's important to be proactive. I agree. I think it's left up to the client to really drive that process, or not the advisors. I mean, unless you have a Copper Beach that's tasked with doing that on behalf of the family. But if you don't, that's unfortunately likely going to be your responsibility to make sure that you're being proactive with that, and just stay on it.
So anticipate change, stay informed, and reach out to your advisor.
Correct.
Yeah. Thank you, Wendy. So that's you pretty much summed it up within 10 seconds.
Yeah, it's just frustrating when I get, and even one gentleman came up to me. He said, "You're so passionate when you spoke to us." I said, "Well, of course I am. If I didn't believe what I was doing and I had such impact, I would do something else." I said, "This is important stuff." And it's unfortunate you guys have to do it yourselves, because no one's helping you unless you have a good team that can help you. But go back to them, push them. And again, if they can't help you, get another team. I was that hardcore about it. Get someone that's going to help you. Your money's too important to you. And they agreed. They said, "You know what, John, I'm going to absolutely take that to heart. And I'm going to call my CPA next week. I know it's tax season for a lot of these guys, but after tax season, I'm going to talk to them, because I need to sit down and go through my taxes and really start focusing on how to better manage my portfolios from a tax standpoint, how to move wealth tactfully through the estate planning process, asset protection, as you brought up, John. I need to look all that. Although I read about it, I've heard about it, I just never applied to me. And I think it, based on your conversation, it applies to all of us in this room. And that was the message.
Well, it's a good message, and you keep giving it.
We try our hardest.
All right, guys. Thank you so much. We appreciate you, and thank you for listening today. Please like, follow, and share this podcast. Until next time, I'm Wendy McConnell.
Thank you for listening to the Truth About Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Copper Beach Financial Group. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.
This material is for informational purposes only. Neither APFS nor its representatives provide tax, legal, or accounting advice. Please consult your own tax, legal, or accounting professional before making any decisions. Copper Beach is not affiliated with American Portfolios Financial Services, Inc. and American Portfolios Advisors, Inc. Securities offered through American Portfolio Financial Services, Inc., a member of FINRA SIPC, investment advisory and financial planning services offered through American Portfolio Advisors, Inc., an SCC registered investment advisor. These opinions are subject to change at any time without notice. Any comments or postings are provided for informational purposes only and do not constitute an offer or a recommendation to buy or sell securities or other financial instruments. Readers should conduct their own review and exercise judgment prior to investing. Investments are not guaranteed, involve risk, and may result in a loss of principal. Past performance does not guarantee future results. Investments are not suitable for all types of investors. Copper Beach is an unaffiliated entity of American Portfolios Financial Services, Inc. and American Portfolios Advisors, Inc. Any opinion expressed in this forum is not the opinions of American Portfolio Financial Services, Inc. and American Portfolio Advisors, Inc., and have not been reviewed by the firm for completeness or accuracy. American Portfolios and Copper Beach Financial Group are not affiliated with any other named business entities mentioned.